Actually, let's welcome in Ed Yardeni. He's with us, I'm told. Ed, good morning. Great to have you with us here. We're celebrating 25 years of CNBC, and thank you for being part of it as well. Prashant here with me is Surabhi. Nigel is, of course, with us as well from the studios.
Congratulations to you.
Thank you very much. What's happening, Ed, with the US dollar? I mean, I think that is the only thing which anyone can talk about. I mean, it's pushing higher relentlessly. We're at what, 106.5 nearly now. That's not good news for emerging market flows. What's your call on the dollar?
No, it's not. We've been bullish on the dollar. We've been thinking that the U.S. economy is doing very well. The dollar was weak a few months ago when the perception was that the Fed was going to be lowering interest rates several times. We thought the Fed was making a mistake, and the bond market agrees with us, and the dollar agrees with us. So I think the Fed's going to have to stop lowering interest rates here, and the dollar will remain strong.
I think Nigel did his. No, absolutely, and that's going to be important for emerging market equities. I mean, this is the first time, Ed, in a long time, and I think in the last 4 years, where Indian stock market, the benchmark indices have fallen over 10% from the all-time highs. We've not had a 10% fall. What is your sense, Ed, as far as EMs go and India is concerned?
Well, look, I think with the Trump 2.0, the world environment is going to be different than it was under Biden, and it might be even different than it was under Trump 1.0. It certainly looks as though Trump is going to move ahead and slap a 10% tariff on all of our imports and 60% on China. This is bound to slow global economic activity. And of course, countries that export to the U.S., other than China, are still going to have to pay a higher, deal with a higher tariff. The consumer in America will pay it, but presumably that could weaken the demand for imports from overseas. So I think it's that straightforward. I think Trump is focusing on the domestic economy and clearly using tariffs as a way to negotiate better deals with other countries. About while all this is going on, it could very well weaken the global economy, as happened in 2017, 2018, after Trump started to impose tariffs back then.
Hi, Ed. Morning and good to see you, Ben, as always. Ed, you've been bullish on the dollar, as you said. Do you think it trends even higher from here? Because at around 106.6, it's looking a little bit excessive, right, in terms of the pace of the move?
Yeah, yes and no. I mean, the strong dollar, the flip side of that, of course, is a weak yen, a weak euro, and lots of other currencies that are weak. It sort of feeds on itself, because if Trump's tariffs lead to weaker global economic activity, that depresses commodity prices. And so a lot of the commodity producers' currencies, the currencies of Canada, Australia, Brazil, Indonesia, other countries that are commodity producers and exporters, those currencies remain weak or get weaker. And meanwhile, the European economies look fairly depressed, and Japan is very hesitant to raise interest rates. So put it all together, with the U.S. perhaps no longer lowering interest rates, or not much lower, that does augur for the potential for the dollar to continue to climb still higher.
Mr. Yardeni, hi, good morning. So we here in India are in a bit of a flux, because there's been this mass exodus of foreign investors. The dollar's ripping higher. You're saying that might not continue for too long. What should Indian investors expect in terms of the way foreign money has been leaving our shores over the last month and a half?
Right. Well, look, India's had a fabulous bull market for a long time, and I think you probably are going through some sort of correction. I don't think this is the beginning of a bear market for India, and I think some of that money has gone on a very temporary basis to China, because China's stock market has had a big improvement. But China's economy is still very much challenged, whereas India's economic outlook remains very promising. So I think there's some profit taking going on in India. It's perfectly normal. It's not a sign that something's going wrong in the Indian economy, in my opinion.
All right, Ed, it's a pleasure speaking with you, and great that we could talk on this special day for us. As I said earlier, we are celebrating, and as you can see, with the 25 behind us right here, 25 years of CNBC TV 18 being on air.